To Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, welcome back to Insurance Matchmaking. And I'm just going to touch on some things that I know I've talked about in the past, but I'm kind of maybe taking a little bit different approach today. And probably going to be, I'm looking at it right now, there's going to be kind of a two-part show, and maybe you've heard me talk a little bit lately about the umbrella plans, and that's what this is going to kind of go to. I have partnered with Chase Gruning of Gruning Health and Wealth to just kind of streamline my business when it comes to the Medicare offerings, but we don't do just Medicare. We do the what's sometimes called the ancillary products that go along with that. And if you've ever heard of a lady called Galen Hendricks, she says I don't like calling them ancillary. We call them necessary, and that's kind of the attitude we're taking. Is there are gaps in Medicare. We've talked about that's why the Medicare supplement plans are also called Medigap, but the Medigaps have gaps too, and some of it's built in because of the limits on Medicare, and some of it is just natural. You're going to have expenses. We use the phrase non-Medicare approved expenses, and some of them are and of course, because a lot of that sometimes comes down to non-medical expenses. So you have things like home health aides, those things, that is not covered by Medicare. Skilled nursing, like after a surgery or something like that, after a short hospital stay, and you go to the rehab facility, that's covered. And that's kind of what we're going to touch on here. Just kind of a quick brief overview of what we call the umbrella plans. We have three levels. The basic one, the base of it is cancer, or we sometimes call CHAS, cancer, heart attack, and stroke. And actually, I mentioned, I think last week, I've just recently signed with another company. They don't have cancer, heart attack, and stroke. They have cancer, heart, and stroke. There's actually some things like getting a stent or having a bypass that the plan will pay out, where the other plans, they're only going to pay out if you have a heart attack or a stroke. So they're still great plans. There's nothing wrong with those plans, but they just approached it a little differently. That's Umbrella 1, that CHAS as we call it. And that works with whether you have a Medicare Advantage or a Medicare supplement plan. Then Umbrella 2, if you're doing a Medicare supplement, every plan's going to start with number 1, the CHAS, and then we add the dental, vision, and hearing, because Medicare doesn't cover dental, vision, and hearing. If you're doing a Medicare Advantage, then we're adding what you've probably heard me refer to as a HIP, hospital indemnity plan, that helps reimburse those big hospital expenses, surgeries, and we can also add a little skilled nursing in there also, because those are big exposures that you have with a Medicare Advantage. In fact, and we never recommend a Medicare Advantage plan without the umbrella coverage. And then Umbrella 3 is those there. Now, every umbrella plan starts off with your Medicare plan and your prescription coverage. Now, of course, if it's a Medicare Advantage, that prescription coverage is included. And then Umbrella 3 adds in what we call recovery, and sometimes call short-term health. And that's what I'm going to talk about today, is some of those plans that we use to fill those gaps. So the title, we got a title for today's show, is the Long-Term Care Wake-Up Call. What are your real options? I've been using ChatGPT to kind of help me streamline what I'm talking about on the show, and I've been vamping right here, so I'm going to try to get into the outline that a chat provided me. But we're going to hopefully help you make sense of some of this, and we're going to talk about some of the things with long-term care. And so we're going to talk about, well, what's the problem? And let's start with a little reality. About 70% of people at age 65 will need over age 65 will need some form of long-term care, whether that's in-home care, assisted living, nursing home. To qualify for this, basically you need to be unable to perform 2 of the 6 daily living activities, or have a cognitive impairment. That's the dementia, that's the Alzheimer's. But if you're diagnosed with that, that's an instant, as we call it in the business, an instant trigger, and it triggers your benefits of the plan. If you have a plan in place that helps with that. If you don't have anything other than just your Medicare, it's not really a trigger. But what we're going to talk about today, and I mentioned long-term care, but I'm taking it right now. We're going from the standpoint of short-term care, and because it's not lifetime coverage, it is something to kind of help bridge those gaps. And so, you may have long-term care plan, but as I get into some of these, we talk about the elimination period of sometimes you have to pay out of pocket until that other plan kicks in. And that's where these short-term plans can be very handy. As I said, maybe you have a long-term care plan that's going to pay very well, but it has to be, say, after that 100 days that Medicare doesn't cover, or it has to be, 180 days, so if you're in assisted living or a nursing home for 180 days and you're paying that out of pocket until you do that elimination period, and then your long-term care kicks in, that's where the short-term care can help fill that gap. So it just depending, the longer you delay taking the benefit once you're eligible, the lower the premium will be on that when we set that in place. So your age when you get the plan is going to affect the cost, and then also how long you wait until you actually start using the benefit. So you would go, like if you moved in a nursing home, you'd go on claim day one, but they're not going to reimburse until 20 days, 100 days, 190 days. It just depends on what that period is. Each plan's a little different. In some of those, it makes sense to start it, hey, on day one again, especially if you have a long elimination period. Some people even go as far as 6 months on their long-term care because they figure, okay, family, spouse, or whatever will be able to take care of me, and I'll be able to stay home for the first 6 months. But after that, they're going to need more care. Then I need to be able to move into a nursing home or have that home health aide full-time at the house. And so that's a lot of those costs that add up. So as I mentioned, we're going to fill the gaps that Medicare leaves. We're going to protect your savings. I think that's a lot of time when people think about, well, I've got money, I've got my 401k, I've got my investments. Yes, but especially if those are in qualified funds, that can raise your income, so it's kind of like it's a tax on you because you're withdrawing from your retirement. You may be taxed on what you took out, and it could push you into that infamous IRMA threshold where you're paying a surcharge on your Medicare premium. So we want to avoid those if we can, and for the cost of these plans, it can save you a lot of money on that. So they can be practical, affordable, and usable, and for most people, a lot of people, that's what they need. So we're going to talk about, I'm going to get into talking about some of the plans that I'm representing now. I've added a new carrier, and actually on this one here, I don't think that new carrier is on my list for this. They do have, we do have the Chaz. So I'm going to say the name of the company. I've taken on a company called Liberty Bankers. They do have a Medicare supplement, very price competitive. So I may be talking a little bit more about that in the future. And they're the ones that has the cancer, heart, and stroke plan. And then they also, so they have the cancer plan. They have a hospital indemnity plan. And what's really neat about the way their plans work, and I say how it works for me is when I go into quote one plan, they have 4 or 5 different plans there. They even have an accident plan, very, very inexpensive accident plan. I think to me it's kind of a no-brainer to add it to all the plans just because it's so inexpensive to cover those costs if you get hurt in the home or something, and now you need to hire help to help you because you got hurt. And it also works. It also has kind of like a disability payment for my younger listeners. So just because I'm talking about things for long-term care or short-term care for seniors, and the reason I bring this up, this comes up a lot when I'm sitting with somebody and we're planning their retirement and their Medicare, what they're going to do, as they're transitioning into retirement. By all means, don't think I'm excluding those of you that, not just empty nesters, but those of you who still have children at home. A lot of these plans that I'm talking about today, you lock in a rate when you get the plan. And there's nothing, you can have a severe disability. I just talked to somebody recently that their son had a terrible auto accident a couple years ago and hasn't been able to work because, the injuries they've received and how it's affecting them, and I believe believe the person also had a traumatic brain injury. And you maybe heard, if you've listened to me a while, you heard me talk about one of my former agents and clients that had a similar situation. And for whatever reason, because they're young, they can't get disability. They're getting denied disability, but they can't work because they can't drive a car. They may not remember what they were working on. They could get hurt, because they can blank out, for a moment and not remember what they're doing. So if they're working around machinery. So that can be really traumatic. But that's one of the things with some of these plans can come in very handy. And I mentioned I went down a rabbit hole when I talked about the accident coverage, but that accident plan can work kind of like a short-term disability, that there's a recovery period that you can pay, get $300 or $600, I can't remember the max per week, for a certain amount of weeks after you have a severe accident. So, and I say, again, when I say severe accident, it's not just car crashes. It can be you fell down the stairs and you broke your femur, or you had a skull fracture, and so they don't want you driving a car, operating machinery or anything for 6 months, not just 6 weeks. Sometimes so it can kind of cover that short-term disability. And the other thing is, with an accident plan, they don't have waiting periods. If you get hurt, you buy the plan today, you get hurt tomorrow, it's going to pay. And if you got that recovery payments on it, those are going to start immediately. They're not like a lot of times, again, with a disability plan, we can say, well, if you wait 2 weeks, it'll cost less. If you wait for the time period to go away, so you have that lower premium that I can make it for 2 weeks, or I can make it for a month before I really have to have my disability payments. That keeps your premium lower because and I know if I did it when I was offered disability from an employer, and I looked at it, it's like, they're hardly paying me anything. Why do I want to keep $8 a week out of my check? I don't think they're paying me enough as it is. And I also had to fall back on, I had my military retirement already. These civilian jobs that came up, that was after my military career. So it was like, I had money that was going to be coming in. So I wasn't going to be desperate, and I had a wife who was working. So I didn't feel I needed the disability payments. Now, my wife, with her job, she took her disability, she took the provided disability, never used it, but it was there, which is a small deduction every week, from her paycheck, along with her 401k and everything else. And it made sense because if she wasn't able to work, there wasn't any other money coming in on her side. I had money coming in to begin with. So it just kind of a different attitude on it. I do encourage everyone. I probably was stupid that I didn't do it. And if I hadn't had, say I had gotten out of the Army and didn't have my Army retirement, so that was the thing. I had my Army retirement. I had my Army, I had my TRICARE insurance. I really wasn't worried about if I wasn't able to work because of a disability. So I do encourage it, though. Everyone, if you're have some type of disability. And again, I've kind of went down a rabbit hole, but we do have disability plans that will just cover for an accident. They're much less expensive. They're also guaranteed issue, because a lot of times some disability plans, if you don't have it offered through work, you're going to have to pass underwriting, for health reasons. Height and weight come into play, smoking status. All those things can make those income recovery or income protection plans very expensive, whereas just an accident disability can be very inexpensive. So I encourage you, if you're working, have at least an accident disability plan, or we can talk about this accident plan from Liberty Bankers. But like I said, I went down kind of a rabbit hole, but every plan that they offer, the other plans can kind of be sandwiched in as a rider to that plan. You may not have the same maximum coverage as the other, the plan by itself. We can put those together, and it's just one application. Really simplifies things. So it looks like we're up on the break. I'm going to get into the other plans that I was going to talk about after the break here.
Join Habitat Restore at their pop-up donation event every second Saturday of each month at First National Bank in Sparta. The Habitat team will be there ready to go to receive your donations. So don't miss an opportunity to declutter and make a difference at First National Bank in Sparta with the Habitat Restore pop-up donation event every second Saturday of the month.
Life moves fast, even here in the Upper Cumberland. Is your internet and wireless keeping up? More families are bundling Twin Lakes fiber internet with Tri-Lite Mobile for faster speeds and dependable coverage. Right now, get your first Tri-Lite Mobile line free for an entire year. No gimmicks, just real savings. Enjoy lightning fast internet at home and reliable wireless everywhere you go, all backed by your local Twin Lakes team. Visit twinlakes.net to bundle and save today. Tri-Lite Mobile, better wireless from people who bring you better internet. First line free offer requires Twin Lakes internet service. Other terms apply. See twinlakes.net.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, welcome back from that commercial break. As I mentioned, I'm going to kind of get into the different plans I was talking about. Now, I use the term recovery care. That is actually, there's two carriers that actually use that name. They use the word recovery in the name of their plans. But all of these plans kind of fit into that category of, either the skilled nursing or the assisted living costs or the home health aid. And to me, that's probably one of the biggest parts of most of these plans that I'm addressing here. And I'm not going to give you full details of every plan. So I'm just going to get some highlights. And that's one of those things we need to, if you're something you want to look into, set an appointment with us. Elijah can help you with these too. And we can figure out what's going to fit you. And as I mentioned, we're addressing this to the Medicare crowd because we offer the umbrella coverage as we are helping people select their Medicare coverage. These things can work with your marketplace plan, or maybe again, when we run into a lot, and I'm glad, the approach that I'm going to be able to help. I feel like I lose out on a lot of opportunity when I do my workshops, and because most people have to wait until they're 67 to draw their full Social Security, they're coming to my workshops for Medicare because they're turning 65 and then they're deciding to continue to work, or they may have a younger spouse, so they're staying with their employers so they can cover their spouse on their employer's insurance. I've kind of not really thought about, one of the things is, again, getting these things when you're 64 instead of waiting till you're 65 and lock in that rate makes a lot of sense. And if something happens, while you're still working, you have the plan too. It doesn't have to be just Medicare. And so, like I said, if you're 35, these plans can work. Some of the plans that I'm going to talk about today, they don't go down to the age 18, but a lot of plans do. So there may be some of the plans I'm talking about may not be available to you if you're under a certain age, but some of them are for everybody over 18. Or some of them, like I talked about before the break, some of those Liberty Banker plans. You can have a family plan, so you can get a cancer plan or an accident plan and have your children on the plan with you also. These are not just for Medicare people. The first one I'm going to start with, and since Aetna is the one that started the name, I think they're the first one that came out with the plan. They called it Recovery Care. So that's the plan I'm going to talk about. And they've improved it. They still have their recovery care. They generally, when they beef up a plan, they don't just get rid of the other plan. And again, if you have that plan, it's not going to go away because you have it, but they may stop selling it. The other thing is, they have to go through state approvals, and so they will keep the old plan in place that it's already been approved because maybe they haven't got the approval for the new plan. But in Tennessee here, we do have the Aetna Recovery Care Choice. So it adds some new features to the recovery care. Some of it's the same base plan, those same basic benefits. It has the same benefits. It's kind of like when you're shopping for an app, and it's like, well, you get this edition, here's the free edition, and with the Pro, you get everything from the free edition plus this. I know a lot of people do Canva just kind of as a hobby, and you get the free one, but you can also do the Pro one, and now you take out their watermarks and things like that. So that's kind of way Recovery Care Choice works. It has the same benefits of the original Recovery Care, but it's added some new things. And this is probably the most structured plan out there. But one of these things with this one is your daily benefits for nursing home and assisted living can be up to $700 per day, and coverage can last up to 360 days. And there's also an option for home care benefits for up to $2,100 per week. Because home care can get really expensive, and it doesn't necessarily cost more than a nursing home. It can. But again, you're in your own home. You're not stuck, in and you have one-on-one nursing care. You're not hoping that nurse comes down the hall when you need your help. So, and the other thing I like about this plan is the benefits are paid directly to you and they are not taxed. And the other thing is you can have family members get paid for helping care for you. So that's a neat thing on that plan. The next plan I have to offer is Manhattan Life's OmniFlex. And it stands out, kind of in the name for its flexibility. You can have daily benefits from $50 to $400. It will cover nursing home, assisted living, and even your hospice care. And it also has a unique feature, what they call their Fast 50. And it means you can start getting cash on day one, even before your elimination period. And that, and that works great if you have family helping at home with them. Also, here's another thing that's neat on this plan. A lot of plans have similar built-in, but, I talked about maybe you're younger, maybe you have a short-term disability, and, or it could be considered long-term disability, but you're able to recover from that disability and get back to full function. If you recover and you go 180 days without care, your benefits reset. So that's a neat thing there. You may have a limit of so many days, but if you go 180 days without claiming it, you can claim it again. So that's kind of cool. All right, we have another company. We just call them GTL. It's just easier. The name of the company is Guaranteed Trust Life. You talk to anybody in insurance business, we're in the health and life insurance side, we're going to call it GTL. This one is very home health focused. This is what probably my introduction to the home health plans was it back in those days when I worked at health markets as a captive agent. This was one of the plans we were able to offer, so I'm pretty familiar with it. It'll pay up to 360 days for home health care. The daily benefits can be up to $450. And it will include things like skilled nursing therapy and even chemotherapy support. One of the things that I don't know why I didn't catch it till just the last year or so, it's 360 days of benefits. I mean, you think, there's 365 days a year. You think that's a year. Actually, it's not. And I think I've mentioned it a couple times on the radio. That 360 days is days of benefits. So if you have someone come into the home 2 or 3 days a week, that 360 days can last you like 3 years. So it's the number of days that you claim reimbursement for, not that after a year it's gone. So that's something there. They could, I don't know if I read this. You can get chemotherapy support. So maybe you paying for that aid to go with you. It would cover that, and it has very simple underwriting. It's like there's 3 questions, and then because there's 3 levels to the plan, and then the 4th level, which is a little bit more robust, a little bit more generous on some of the limits. And I mentioned that up to 720. Actually, the 720 is on the 2nd level and the 3rd level. But if you're asking for the 3rd level, it has a little bit more coverage. There is a 4th question, and it's in I think it's, gosh, I should have that in front of me, but it's like, do you think you're going to be in the hospital or have surgery anytime in the next year? It's pretty simple. If you're in you're in fair health, because maybe it's a better way to put it. You don't have to be in great health. Long-term care plans is one of the things we'll get into. They're very strict on underwriting. These are much easier to get approved, and that's always, a lot of times these can come in handy that maybe you might not qualify for a long-term care plan because maybe you're a type 2 diabetic, maybe the life insurance commercial you may hear every once in a while on the radio that you're a little portly. So those are some things. These plans are very, very easy on. I forgot, maybe I should have highlighted back there on the Aetna plan. Aetna doesn't have a height and weight question on their plans that I mentioned. They're necessary plans. So that's one there. Heartland National, that's a company I just, about a year, I guess. I've just in the last year, I've been writing some of their plans. But it's, again, like GTL, it's another strong home-based plan. You can have up to $600 per day benefit. Again, covers up to 360 days of care. And it also has that 180-day benefit restoration. And then we have, so you can also add optional riders like hospital and cash for ambulance. Again, this is one of those great options for people who want to recover at home. And then Bankers Fidelity, they also call recovery, and it's probably it's more of a straightforward, budget-friendly option. They have daily benefits of $30 to $300. Again, 360 days of coverage. It covers both nursing facility and home health care. That's actually a rider that you would add on. And what makes it different, there's no hospital stay required to qualify for, and that applies to some of these other plans too. That the hospital indemnity plan that has a skilled nursing rider, those won't necessarily, the plans won't necessarily require a hospital stay, but Medicare does. So that's the other thing that can come in handy if you start the benefits to start paying it on day one. Is the doctor wants you to go to the doctor says you don't really need to be in the hospital, but maybe you're not ready to go home, or maybe your family's not ready to care for you at home, and they decide we'd rather have you be over here at the skilled nursing facility, and we're going to have to pay for it. Some of these plans, if you have day one coverage, will at least reimburse a portion of that daily cost. And of course, then it does have the restoration of benefits also like the others. So the big picture is all of these things, again, that I mentioned, I think at the start of the show, Medicare does not cover long-term care. Or it doesn't cover long-term care the way people think, is the way Chat said it. It basically just does not cover long-term care. The home health, you can have home health care, but that is somebody coming in and checking your vitals and maybe a wound care, and they're gone. Maybe the nurse might give you a sponge bath because that would be considered part of the medical care, but they're going to come and they're going to leave. They're not going to sit. They're going to not sit with you, help you prepare foods and things like that. So that's where these plans come in really handy for that. And of course, there's not any lifetime solutions, but these plans can really help bridge those gaps. Of course, it's better than nothing. And if your plan is Medicaid will take care of me, that means spending down your assets. And most people don't love that idea, So if you want help figuring this out, give us a call. Our number, of course, you can find it on the website, but 931-881-3969. You can always visit insurancematchmaking.com or mattlibbyinsurance.com. And one of our skilled professionals will get you taken care of, because at the end of the day, it's not just about insurance. It's about protecting your independence. And we want to make sure that you have a plan that covers you, and you need to be sure that you can recover and hopefully recover in the comfort of your own home. I will be talking in next week about some other alternatives to traditional long-term care. And so if this piqued your interest, be sure to tune in next week here on Grace 107.7. And remember, at Matt Libby Insurance, we can cover you head to toe, and it doesn't cost you an arm and a leg. It doesn't have to cost you an arm and a leg. And as we like to say, we don't sell you insurance policies. We match you to the right plan for you. So until next week, this is Matt Libby signing out, and we'll talk again on Insurance Matchmaking.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.